Hello, friends. Welcome to the Weekend Investing Stock Market Weekly Review for the week ended 20th of June. A, a week where, we had the conflict of Iran Israel spike up, yet the markets remained in a sideways zone, I would say, and have ended the week in not such a bad situation, I would say. Some sectors have certainly taken some dive, but largely, I think the markets have remained quite stable given uh, the specter of very high oil prices. Also, if this that Strait of Hormuz is blocked, then 20% oil gets blocked, and that will cause a spike in oil. So that is probably the only big fear factor in the current situation. We had some great stories come from our research desk this week. Uh, Magic trick for successful long-term portfolio, lessons from the Alibaba stock, our emerging market stocks undervalued compared to the US dollar cycle. Is it reversing? Is it silver's turn to shine? Is it a large cap comeback around the corner? How gold has protected buying power? How RBI has outperformed other central banks? Why gold is still a winning bet in 2025 and gold prices are going up, looking at supply and demand. So many such data backed uh, stories have been put up in the blog as well as the newsletter. Please do read them. Disclaimer as always, please read it fully and understand it, and of course, do subscribe to the channel. So this week charts, let's look at some charts. This is the daily chart. This week we started after this dip on previous Friday, and Monday was a great move up, and then Tuesday, Wednesday, Thursday we went down, and Friday was a good move up. So overall, 1.59% gained this week. When we see it in the weekly chart, we have been stagnant for almost 6 weeks, but we have closed at the highest point in this 6 weeks on the weekly chart, and the chart is not looking so bad, frankly. In the S&P 500, we have been stagnant for last 2 weeks, was minus 0.15% for this week. Given the fact that there is so much talk about US recession, yet the market remains near all-time highs, tells you that market prices can be very detached from the base economy, and that confusion will always remain for conventional and discretionary investing. Gold down 1.33% this week. 9,934 per gram is where we closed, but the chart looks amazingly good so far. I think there is no problem on the gold front. Dollar index also has gained a little bit this week, 0.65%. Dollar index is not really crashing as it was expected, finding some stability there. In the benchmark indices, we see Nifty 50 is the only index that has gone up 1.59% this week. Nifty Next 50 down 0.3%. Nifty Mid Cap down 0.6%. Small caps down 1.7%. So big cut on small cap index. Nifty 500 up 0.59%, and other indices like Nifty 100 quality up, Nifty 50 value is up, Nifty Alpha 50 is up, Nifty top 10 equal weight is up, Nifty 100 low volatility is up, Nifty 100 equal weight is up, and Nifty 500 momentum 50 is up. Sectoral overview: media down 3%, pharma down 1.7%, PSU banks down 1.3%. Uh, these were the pretty much the ones that lost ground this week, and we had the best performer in consumption stocks 2.2% up, infrastructure stocks 1.8% up, private banks 1.6, and services sector and autos 1.5% up. These were some of the bigger moves. The top three remain the same in terms of momentum score: defense, capital market, and banks, private banks rather. And then you have the overall banking and the financial services. So these have remained the top rung counters. Consumption stocks have made a comeback in the very short term, which is a good news. IT stocks are also coming back up. Auto stocks are coming back up. PSU banks have taken a big hit in the very short term. And capital market stocks are also have receded from top positions to double digit. In the weekly advance decline stats, Nifty was the major gainer. Nifty up 78%, stocks in advances versus 22% in decline. But rest of the market was at 50 or below 50. Mid caps was up 56, but small caps up 42 only. Micro caps up 34% only. And CNX 500 index is almost exactly at the middle at 51%. In the percentage of stocks outperforming benchmarks, we see some good outperformance in Nifty, 64% of stocks outperforming benchmark. But even other indices, Nifty Next 50, mid cap, small cap, all doing quite well actually. CNX 500 overall has poor number of stocks outperforming the benchmark, 43% only. In the mid cap segment, dropped from 52-week high. We can see the Nifty under 10% has gone up dramatically from previous weeks. So under 10 to 20% is now 76% of the stocks. And if we include 20 to 30% bracket also, then 90% of the stocks are within this bracket. And the others have remained the same. Nifty Next 50, mid cap and small caps have pretty much been in 10 to 40% range, most of them. And micro caps of course has significant number in 30 to 50% range also. So the drop from 52 week high stats remains quite weak. Is the trend improving or declining? So certainly on 50 DMA there is a decline in terms of number of stocks above the 50 DMA. So it was 80% stocks, now it is only 63% stocks above 50 DMA, and above 200 DMA has been a flat figure for the last month or so. In the sectoral trend check, uh, on the 200 DMA, we can find that CNX 500 is at 48% of stocks above 200 DMA. So roughly half the stocks of the top 500 names are above 200 DMA and half are below 200 DMA, of which private banks have the most stocks above 200 DMA, financial services, services sector, infrastructure, PSU banks, autos, all these have more stocks above the 200 DMA, and hence the trends there are more longer term looking better. You have public sector enterprise stocks that have only 30%, along with energy, oil and gas, FMCG, very poor number of stocks above 200 DMA. So most of the stocks in these sectors are below the 200 DMA. In the FII DII stats, a big buy number has come in the FII cash segment. Uh, One second. Yeah, 794 crores of cash. And in the DII space, we have selling of 3,000 crores, although we had good 4+ days. Overall, if we see, FIIs have bought the last four sessions, which is good news. And in the overall cumulative impact, you still have FII cash at minus 7,000 crores in the last 1 month, and the DII cash is up at 1,01,000 crores. Uh, that looks to be too much of a figure, I think. I am not sure if this figure has gone wrong. Maybe perhaps it is right, but that's a huge gap between the FIIs and DIIs. So, but we'll check those figures and come back. So that's the sort of wrap for the week. I think markets are in reasonably stable situation. Of course, any escalation on the war front will cause oil to go up, and that will be our major worry to follow. Have a great weekend, and I'll see you in the next one. Bye.